Well, investors on edge looking for clues on when the Federal Reserve will raise interest rates. This as central bankers gather in Jackson Hole, Wyoming for an annual economic retreat. For more analysis, let's get straight to Jasper Lawler, a market analyst with CMC in London. All right, Jasper, glad to have you with us. We just had Vice Chair Stanley Fischer tell CNBC that the market volatility we've been seeing recently could affect the timing of a rate hike. What do you say?
Well, if you listen to Stanley Fischer, he's the vice president of the Fed, you have to pay attention and believe that it must. It's unbelievable that just close to 2 weeks away, they're still uncertain. But obviously, this movement from China, the devaluation yuan, is a bit unprecedented, as Fischer has noted, and it could impact policy decision just even within the next couple of weeks.
Yeah, the Fed seems to be pretty torn. We also had Kansas City Fed Governor Esther George basically say the other day that, the market sell-off may not have an impact on the timing of a rate hike. So as an investor, how do you grapple with this?
I think the way that you have to understand where the Fed is coming from in general with this is that they understand that their policy over the past few years have impacted asset prices. And so quantitative easing particularly has risen the value of house prices in the US, but also stock market values. And they're aware of the fact that when they slightly alter their policy, even by 0.25 basis points, it's going to create volatility in the markets. So I think they're expecting volatility. What they don't know is quite how much can happen and how much. And if it's just too much, I think that they understand would set them back from the timing in which they hike rates. But I think they're all generally of the opinion that the economy is strong enough, but this volatility is a bit of an unknown.
Yeah, and we should also point out that Esther George is more on the hawkish side, but we also had St. Louis Fed President James Bullard, who is more of a centrist, tell Bloomberg TV that the market swings, don't change the outlook for the economy, which, certainly has some validity to that statement, right?
Well, absolutely. I mean, the movements in the market are not necessarily tied to the economy. We've seen US GDP in the second quarter accelerate beyond expectations. That undoes somewhat of the slower first quarter. The labor market is improving. The only real unknowns here and the only reasons to hold back from a rate hike are just inflation, which we've seen today, core PCE prices slipping back because of the lower oil price largely. And we don't quite know when these oil effects are going to get past the market. And we don't quite know when these effects from China, whether they'll take place and whether they'll take effect and quite how much of an effect that will be.
Yeah, and that core PCE is the Fed's preferred inflation gauge, and the report comes just one day before Vice Chair Fischer will address the Jackson Hole conference tomorrow on Saturday. He's going to be speaking about inflation. Do you think he'll downplay the weak inflation we've been seeing?
I think it's one of the key reasons that they've held back on hiking rates this long. And the way he positions it in terms of how close the Fed wants to come to their 2% target, I think will be key as to whether September is actually a realistic time for a liftoff or not. And inflation is definitely a key part of it. We're looking at inflation. We're looking at what he says about the Chinese volatility. What he said in the interview so far to CNBC would suggest that he just doesn't know on both fronts. All
right, Jasper, we'll leave it there. Jasper Lawler, a market analyst with CMC. Jasper, nice to have you with us.
Thank you.
I'm Scott Gamm, and you're watching The Street.